A mixed bag of corporate results push European stocks to a one-week low. A Moody's downgrade of Catalonia and other regions pushes Spanish yields higher, and the yen regains ground but remains vulnerable to Bank of Japan intervention expectations. I'm Nigel Stevenson. This is Market Pulse. Well, more on the FX markets in just a second, but first a look at some of the big equity losers and gainers. The morning sell-off is across the board, with all sectors falling. The Swedish engineering group Alfa Laval dropping almost 7% after a slump in shipbuilding hits profits. But the luxury goods down after a profit warning from Mulberry, its shares slumping over 20%, with blue chips Burberry and LVMH also sliding. Some big names bucking the trends, though. ARM Holdings up as the Apple chipmaker posts Q3 profit up over 20%, and Michelin and Swedbank also among the leading gainers after positive updates. All right, let's get back to currencies now, as I'm joined by HSBC's Dara Ma, and we're concentrating on the Japanese yen to start with. Dara, thanks very much indeed for joining us today. Trading just about, 79.87 as we speak, so above 80 for the first time since July. Do you expect further weakness?
Not much, no, not much in the yen.
And why not?
Well, we've been here before so many times, and the market, I think for, 5 years, we've been waiting for dollar yen to go higher, and every time it gets going, everybody tells me this is the one. But look, they're going to ease, but the market has gone from 5 trillion easing to 10 trillion easing to chatter of 20 trillion easing. People have told me about bond yields have doubled, the spread has doubled, yes, from 10 to 20 basis points. I just don't see enough genuine stuff has changed the background that we can talk about dollar yen just going consistently higher. I would sell this rally, not today, but I would sell this rally.
The other side of it is possibly the politics, in that the United States wants a weaker yen, but a stronger yuan. Double standards from Washington? A
little bit. I mean, their view would be, look, the yen is overvalued and therefore we can tolerate some weakness. Some would argue that the yuan is undervalued and therefore really we need to constantly strengthen. I mean, we would disagree on both counts, really. We think both are reasonably fairly valued. But you're right, the politics of the situation is that there's tolerance for one rather than the other. And of course, with the US election, that feels much more pertinent.
And do you expect, very, very briefly, that the South Koreans and the Chinese to fight back?
I think, look, a few are fighting back, aren't they? This idea of currency weakness, currency wars, it's a very low-ebb conflict at the moment. But nobody wants an especially strong currency. You can understand it. It's a stimulus. It helps your economy. But we can't all have it, can we? So there will be tensions at different points.
Okay, well, let's try and balance up euro against the yen. So the euro is at a 5-month high against the Japanese currency. But which economy is weaker? I mean, Moody's downgrading 5 Spanish regions overnight. And yet we're at a 5-month high. Why?
Well, I suspect because the euro doesn't trade on the economy. I mean, it sounds like it should, but it doesn't. It trades on event risk. And the event risk, of course, the euro context was euro breakup, and that's just diminished so massively post the Draghi OMT, that whole carry-on. The yen kind of trades as the risk-on, risk-off currency, and depending which time of the day you ask, we're either risk-on or risk-off. So it's hard for it to get any real directional traction. So what happens, of course, is euro-yen, I think, to a large extent, becomes the euro-dollar proxy, broadly.
Okay, let's throw forward then. Euro-dollar, we've got PMIs tomorrow, and of course the Fed, probably more important, and US GDP on Friday. Where's euro-dollar going?
I think it will grind higher. I mean, I know we've just inched to that 130 level again, haven't we? But I think through the week, I think we'll push higher. I think the numbers from the US will be reasonably upbeat. I think the Fed will be upbeat, so that will give us a bit of a risk-on tone, which I think will suit the euro more than the dollar.
You don't think they'll be quiet because we're heading towards the election when they're not supposed to sort of get involved?
I think it'd be more peculiar if they were quiet, wouldn't it? Because that would smack of politics. If they acknowledge that we're close, they should be just saying we're doing our job as normal, and here's how we see the world. I think that would be the more appropriate line of attack.
Okay. A final question, very quickly. Pound against the dollar. Again, UK GDP coming out on Friday. We're 159.88 at the moment.
The great distorted number. We have the second quarter bank holidays, an absolute horror. We have the third quarter. Flip side would be a wonderful 0.6 bounce. Reality is the underlying economy in the UK is weak and sterling is vulnerable.
And so will that be reflected how in the market?
I think sterling weaker against the euro would be my play. I think euro sterling will grind higher alongside euro dollar. I think that's the way to go.
Okay, Dara, thank you very much indeed for that. In tech news now, Yahoo in the spotlight on Wall Street after it beats forecasts, and the new CEO, Marissa Mayer, promises to ride the mobile wave. Nokia selling bonds to raise nearly $1 billion to help it claw back market share lost to Apple and Samsung. And Apple set to take on Google and Amazon in the pocket-sized tablet arena. A mini iPad launch is expected later today. Now, how times have changed. On this day in 1989, fear of Japan's tech might was in full swing. Business Week warned Japan was launching an offensive that would test America's computer might and begged Congress to enact a new industrial policy before one more basic industry slips slowly away. A former Japanese affairs official at the Department of Commerce warned the Japanese are going to run away with the global computer market. Perish the thought. That is it for today's Market Pulse. Find out why BP's Rosneft deal makes it vulnerable to a takeover. That's in today's Breaking Views, available on demand right now. I'm Nigel Stevenson. This is Reuters.